In a bull market, you make money. In a bear market, you get rich. We're going to go over multiple charts and analyze them together. Then I'll give you guys 3 tips to get rich in a bear market. Run that intro. Looking at this first chart, we can see earnings scorecard for Q3 2022 for S&P 500. 85% of S&P 500 companies reporting actual results. 70% of S&P 500 companies have reported a positive EPS surprise, and 71% of S&P 500 companies have reported a positive revenue surprise. For guidance, in Q4 2022, 50 S&P 500 companies have issued negative EPS. 23 S&P 500 companies have issued positive EPS guidance. At the bottom of this picture, you could see a chart. That's the 10-year chart with 2 lines plotted on it. The light blue line is going to be your S&P 500 price, and the darker blue line is going to be your S&P 500 forward 12-month EPS line. You can see for the past 2-3 years that the light blue line, the S&P 500 price, has been elevated above the EPS, meaning that it's kind of been a little bit overvalued. And now during this little bear market downturn we're having, the EPS is actually above the S&P 500 price, meaning it's kind of an undervalued pick right now, kind of getting a good value here on tech, but I would say not to jump the gun too early. Peter Lynch has a great quote on this. The quote is, "Missing the bottom on the way up won't cost you anything. It's missing the top on the way down that's always expensive." And what he's pretty much saying by that is, you don't have to try to time the bottoms. What you should be looking for or trying to time is the tops and try to mitigate risk and take profit around there. And that's what's going to make you the most money. Looking at this, we're looking at the history of US bear and bull markets since 1926. Unfortunately, it does get cut off at 2018, so it's missing some of those 2020 COVID gains. So those bull market returns would have been even better. But you could see the average bull market period lasted 9.1 years, where the average bear market lasted only 1.4 years, so 9 years compared to 1 year. And then the bull market returns in those 9 years on average were about 476% cumulative total return, where in the bear market it was a cumulative return of only 41%. So you could just see, comparing those two, being long is a much more beneficial thing in the total market. That's why it's always smart to have long-term stocks. Scalping and shorting the market in the short term to medium term is always beneficial too, to mitigate risk and lower some of your costs on your long-term stocks. Another way to mitigate risk is to lower your cost basis in current investments. One way to do that is to repurchase shares for a lower price in the investments that you have right now. You can choose between dollar cost averaging or lump sum investing. Dollar cost averaging is purchasing a small amount, such as $100 or $200, while the price keeps getting lower and lower, so that you can mitigate risk and keep a nice average on the shares. Another way is lump sum investing, is where you just invest whatever you have at the current time and invest all of it that you can. That sometimes, as you can see on this chart, returns better, but the risk is a little bit greater, as you can see on this chart. Now, looking at a great chart of the S&P 500 for the year of 2022 and the key moments on its way down. First, we have all-time highs in late December of 2021, followed by Fed signaling its earliest rate rise to fight inflation to start the year off, which led to a sharp sell-off. We get a small relief bounce before a double top forms, and we come rushing back down. Then we have Russia attacking Ukraine, US crude topping 120 per barrel, and Fed raising rates for the first time since 2018. The market miraculously tries to rally, at which point the 2 and the 10-year yield inverts for the first time since 2019, causing a lower high in the S&P 500 and a barrage of rate hikes following that led to an even sharper sell-off. As you can see, the spread between the 2 and the 10-year yield is still in the negative for 2022, showing negative signs going into 2023. That, paired with the EPS reports we were looking at, where more than a majority of the companies in the S&P 500 are looking at negative guidance and negative revenue for Q4, we're looking at a pretty negative Q4 and Q1 2023 here. So for the next 2 quarters, the Fed's rate decisions will control how much farther and how much longer we continue to grind down. But while we wait for the Fed to pivot, which could last a lot longer than many hope for, I'll give you guys 3 things to do that'll help you get rich in this bear market. An underrated and often forgotten about position is cash. Do you have enough cash in this recession? Do you have enough buying power to keep buying the dip? These are questions you need to ask yourself as an investor. Many investors do the wrong thing in a downturn, and when they see their stocks turning around and turning red, they actually take money off the table, start selling their stocks, stop buying. And that's why a lot of people don't actually make the returns that a lot of these professional investors make. Second thing you need is patience. Investing in a bear market is not like what we had in this recent bull market. You need to understand, you will see your investments go down for a period of time. You will not get instant gratification like we used to have. You're not going to invest one day and see 20% gain in 1 week. You might see a 10%, 20% loss in a month or a week, and that's where you would have to double down or average down. That's where you become a great investor and you become rich, is in these accumulation zones where everybody else is selling, you're buying. And when everybody else is buying, you're selling, taking your profit. So I told you guys stack your cash. I told you guys to have some patience. But none of that matters if you can't do number 3, pick quality stocks. To pick quality stocks, you should go over financial reports, look over the charts, and make sure to stay on top of the news. And you'll see which companies are doing better than others, which companies are dropping better news, which companies are having better earnings. Those are the companies you want to be in. I do have a video for the best recession stocks to buy in 2023. If you do want some recommendations from me, I'll drop that in the description for you guys. Hopefully these tips helped you on your path to financial freedom. If you want even more help and want to set up or change your long-term portfolios, you can go over to my Stand store, and over there I have a long-term portfolio ebook that just for YouTube watchers of this video, you guys are getting a coupon code for. For you guys who made it this far in the video, the coupon code you're going to use before checkout is just YouTube. Capital Y, lowercase everything else. Thank you guys for making it this far in the video, and thank you guys for watching. I appreciate all the subs, likes, and viewers. Thank you. Have a good one.